Welcome to the Deep Dive. We're here to break down complex info into, well, the essential nuggets you need. Today, we're digging into the recent earnings call for Astera Labs, ticker ALA. It happened just after market close on August 5th, 2025.
Exactly. And our mission here is really to cut through all the noise, the report, the commentary, and pull out what really matters. We want to help you understand where Astera Labs fits strategically in this super fast-moving AI infrastructure world. Honestly, what's fascinating isn't just the numbers themselves, but the story they tell about where AI is actually going.
Right. So let's kick off with those headline numbers, the ones that really got the market talking. Astera Labs delivered, well, a really strong beat across the board for Q2. Their non-GAAP EPS, that's earnings per share without some of the one-off stuff, gives you a clearer view of the core business, came in at $0.44.
Wow, $0.44. That's way above the $1.32 consensus estimate, right?
Yeah, a huge beat, like 38% above expectations. Pretty substantial.
And it wasn't just the earnings, was it? Revenue, too.
Oh, yeah. Revenue surged. $191.9 million. The consensus was looking for more like $172.5 million, so that's an 11% beat there.
And connecting that to the bigger picture, that's not just growth, it's kind of explosive, isn't it?
Absolutely. We're talking 150% year-over-year increase, and even quarter-over-quarter, a solid 20% jump.
So the market reaction makes sense then, that immediate pop after hours.
Totally. The share price jumped about 11% after hours, went from around $135.54 to $150.30 pretty quickly, like within 30 minutes of the call.
That immediate double-digit jump, it really aligns with the overall bullish tone from management, doesn't it? All that upbeat talk about demand.
A clear vote of confidence, for sure. But, okay, beyond that initial stock pop, what does this tell us about their actual operational strength? Is this just one good quarter, or is it signaling something bigger?
Oh, I think it's much more than just a good quarter. This kind of beat, it suggests Astera Labs is really cementing its role. They're becoming essential, like the plumbing underneath this whole AI revolution.
The plumbing, I like that.
Yeah, they're not just riding the wave, they're like building the pipes it flows through. If you dig into the financials a bit more, their Q2 non-GAAP gross margin, for instance, really robust at 76%.
And that was up quarter-over-quarter, too.
Yep, up 110 basis points. Basis points are just hundredths of a percent, but still a solid improvement there.
And it wasn't only gross margin, but operating margin looked good, too.
Exactly. Operating margin hit 39.2%. That's up 550 basis points quarter-over-quarter. That shows really strong efficiency as they scale up.
That's a big jump. And they're generating cash, too.
A healthy amount.
Yeah.
$135.4 million in operating cash flow. So they're turning those sales into actual cash. And the standard GAAP diluted EPS, that came in at $0.29.
Okay, so strong Q2. But this performance, it naturally makes you ask about the future, right?
Yeah.
Especially Q3. Did they give guidance?
They did, and it points to continued growth, maybe a bit more tempered sequentially. For Q3 revenue, they're expecting between $203 million and $210 million.
So still growing, about 6%, 9% quarter-over-quarter.
Right. But, and this is important, the non-GAAP EPS guidance is a bit lower than Q2 actuals. They guided between $0.38 and 39 cents.
Okay. So revenue up, but EPS slightly down sequentially. Why is that?
Well, they attributed it partly to a higher non-GAAP tax rate, expected to be around 20% in Q3 because of a recent tax law change.
Taxes. Always fun.
Tell me about it. They did clarify, though, the full year 2025 non-GAAP tax rate is now estimated at 15%, and long-term it should normalize around 13%, so maybe a temporary thing. Also, Q3 gross margin is expected to dip just slightly to around 75%, mostly due to product mix, they said, including more hardware modules like their Taurus product.
Okay, so a slight dip in Q3 margin guidance, but sounds like explainable factors. And they're still investing heavily in R&D, right?
Oh, absolutely. Non-GAAP operating expenses were around $77 million in Q2. They're clearly scaling up R&D, which you'd expect. It's key for expanding their long-term market opportunity.
Yeah, the balance sheet. How does that look?
Very strong. Ended Q2 with $1.07 billion in cash equivalents, and marketable securities. That's a fortress balance sheet, gives them tons of flexibility.
Okay, so operationally, things look pretty solid.
Yeah.
Strong foundation, which brings us to the really interesting part, I think, their strategic vision, this AI infrastructure 2.0.
Right. AI infrastructure 2.0. What exactly is that, and why do they think it's such a big deal?
Yeah, sounds like a tech buzzword, but the CEO framed it as a really pivotal shift, moving towards open standards-based AI rack scale platforms.
Open standards, meaning less proprietary stuff, more vendors involved.
Exactly. Leveraging broad innovation, a multi-vendor supply chain, moving away from those closed single-vendor systems towards more open, flexible architectures for building these massive AI racks.
And this vision, it fuels a huge market opportunity projection, doesn't it?
Massive. Management's talking about a $5 billion rack scale connectivity, total addressable market TAM by 2030.
$5 billion. That's the entire potential pie if they got everyone. Huge number.
So what's actually driving that optimism? Their products, right? Especially Scorpio.
Absolutely. Scorpio is front and center. Their Scorpio PCIe 6.0 switches. PCIe is like the data superhighway inside computers. Those switches are now over 10% of total revenue.
Wow. 10% already.
Yeah, making it the fastest ramping product line in their history. These chips are critical for what's called PCIe 6.0 scale-out applications, basically connecting lots of GPUs or other processors together efficiently for these giant AI tasks.
And there's the next generation coming too, Scorpio X.
Yes, and this is where it gets really interesting, like you said, Scorpio X. They're positioning it as the anchor socket for next-gen AI racks.
Anchor socket, like the central hub.
Kind of, yeah. The foundational chip everything else connects into in these new super powerful AI systems. They've already got 10 early design wins with hyperscalers, the big cloud guys. That's a massive vote of confidence.
So when does that start shipping?
Pre-production volumes late 2025, they said. Then high volume production ramping in 2026. And here's the key bit. It's projected to quickly outgrow their current P-series revenue beyond 2026.
Why? Just newer tech?
Partly, but also because it offers much higher dollar content opportunities in what they call scale-up connectivity. Basically, these X chips are more complex, handle more, so Astera captures more value from each system, especially those really integrated, powerful AI servers.
Okay, so Scorpio's clearly the star, but other product lines are chipping in too.
Definitely. The Aries family, their retimers, continues to grow and diversify. It's used across GPU systems, custom ASIC systems. It supports those PCIe 6.0 ramps we talked about.
And Taurus, you mentioned that affecting margins slightly.
Right. The Taurus family showed strong growth. That's driven by demand for active electrical cables, or AECs. Think of them as smart high-speed cables, way better than old copper for the crazy data rates AI needs.
Like 800 gigabit Ethernet.
Exactly. They're vital for that transition. Broader adoption expected in 2026. And then there's Leo.
Leo. That's the CXL stuff, right? Compute Express Link.
Correct. They're CXL controllers for memory expansion with CPUs. CXL is a game changer, letting processors share memory way more efficiently. Crucial for memory-hungry AI. Leo products are already shipping in pre-production as CXL-ready platforms emerge.
And all this ties into their strategic partnerships, right? This Switzerland of open fabrics idea.
Absolutely central to the story. They've deepened their work with NVIDIA on NVLink Fusion, giving customers more options for using NVIDIA's AI chips.
And that ASIC partnership with Alchip.
Yeah, that looks interesting. Combining Astera's connectivity stuff with Alchip's custom chip design capabilities should really expand their reach, get them into more customer designs.
But the big long-term play seems to be UA-Link.
I think so. That's positioned as a key growth driver for 2027 and beyond. It's an open standard, memory-focused fabric built specifically for AI. Combines low-latency PCIe with super-fast Ethernet speeds up to 200 gigs per second per lane.
And who's backing it?
Well, AMD has publicly endorsed it, which is significant, and reports say multiple hyperscalers are putting it on their roadmaps.
So that really contrasts with the more proprietary approaches out there.
Exactly. It emphasizes Astera's commitment to an open ecosystem, multi-vendor supply chain. Could be a huge differentiator down the road.
Okay, that sets up a really fascinating dynamic in AI hardware. Now let's step back and look at the market context for Astera Labs. The stock performance has been, well, incredible.
Incredible is the word. Up almost 47% in just 1 month. Nearly 90% in 3 months. And over the past year, a mind-boggling 219% gain.
Wow. That just crushes the semiconductor index, the SOX, and the broader S&P 500, right?
By a huge margin. Shows massive investor enthusiasm. They are really buying this story.
What fueled that recent surge? Anything specific?
Well, there was that Stiefel price target hike to $145 just before the call. And they had a ribbon cutting for their new San Jose HQ a couple of weeks ago. Bit of positive PR. Plus, the whole backdrop of strong AI spending just lifts all boats, especially connectivity names like Astera. They seem to be outperforming even within the sometimes choppy semi-space.
But it can't all be smooth sailing, surely. The sentiment is bullish, obviously, given that after-hours pop.
Mhm.
But are there any caveats?
Always nuances, right? Stiefel, for example, they love the story. They think Astera is running an NVIDIA-like playbook in AI plumbing, and that their guidance looks conservative. That's a powerful comparison.
An NVIDIA-like playbook.
Uh-huh.
High praise.
But
But
we also heard some caution flags from buy-side desks, the big institutional investors, mostly around valuation. That PE ratio is around 280x forward earnings.
oof, 280x, that's definitely up there. Steep.
Very steep. And there's always the risk with hyperscalers. Their order timing can be lumpy, unpredictable. That could definitely create bumps in the road for revenue and earnings quarter to quarter.
So that really brings up the key question, doesn't it? Can they sustain this momentum, justify that premium valuation?
It's the billion-dollar question, maybe literally. Their operational execution is strong, those margins, the cash flow, even while pouring money into R&D. And they're clearly evolving, right? From just being a retimer company to this full-stack AI connectivity platform, trying to be that Switzerland of open fabrics.
That strategic shift in the execution so far definitely adds weight to their argument. But expectations are sky high now.
Exactly. Okay, so this feels like the right moment to put on our speculative hats. And let me just say this very clearly. This is not financial advice. We are absolutely not telling you what to do with your money.
Right. Purely a thought experiment. Exploring some, let's call them outrageous but plausible trade ideas based on everything we've just discussed.
Okay, so given that incredible run-up, over 200% in a year, and that sky-high 280x forward PB, a lot of people would look at that and say the risk-reward is just terrible right now. Too much risk for potential upside.
Makes sense. The easy money might already be made.
Possibly. However, you've got management painting this picture of AI infrastructure 2.0, that $5 billion TAM by 2030. You've got the Scorpio X ramp coming in 2026, which should drive higher revenue per socket. And then UA-Link potentially becoming a big deal in 2027 and beyond. So you could argue there's still a significant multi-year growth runway that maybe, just maybe, isn't fully priced in yet, even at these levels.
So how does that translate into a wild trade idea? We know Q3 EPS guidance is a bit lower than Q2, which could seem like a negative sign.
Right, but remember, Stiefel called that guidance conservative, implying management might be setting a low bar they can easily beat.
Okay, so what's the outrageous play?
Here's where it gets really speculative. A long-term, very bullish play. Despite the valuation concerns, what if the market is still underestimating just how big and fast this AI infrastructure 2.0 transition will be, and how central Astera could become as that Switzerland of open fabrics?
I'm listening.
An outrageous but plausible idea could be something like taking a leveraged long position, maybe using long-dated, deep-in-the-money call options, say, expiring in early or mid-2027.
So using options to bet on the stock going significantly higher over the next couple of years.
Exactly. It's a bet that the Scorpio X ramp in 26, then UA-Link really taking off in 27 and beyond, that this drives sustained earnings beats, maybe even more, multiple expansion, essentially betting that they can grow into and even exceed this currently high valuation.
That's definitely bold. What's the catch? The risk.
Oh, the risk is huge. Significant multiple compression is absolutely possible if their execution stumbles even a little bit, or if those hyperscaler orders create unexpected volatility, or if a competitor makes a breakthrough. You could lose a lot very quickly, especially with options.
But the theoretical reward, if they really do become the go-to connectivity standard for AI,
could be substantial, yes. But again, just spitballing here, absolutely not financial advice. Do your own research.
just still clear.
Oh.
Okay, so let's recap the core takeaways here.
Sure. Astera Labs delivered a really strong Q2 beat. Growth is robust, driven by that diverse product portfolio. Scorpio switches are ramping fast, and there's huge anticipation for Scorpio X.
And strategically, those partnerships and their push into open standards like UA-Link seem key, positioning them as a critical player as AI infrastructure evolves.
We've seen how they're moving beyond that initial retimer niche, becoming this broader AI connectivity platform. The market certainly noticed.
What's the one big thing that stands out to you from digging into all this?
I think it raises a really important question for you, the listener, to think about. As these AI workloads keep demanding lower latency, more integrated systems, how is this battle between open standards like UA-Link and the more closed proprietary solutions going to play out?
Right. And what does Astera's Switzerland strategy really mean for the companies building the actual plumbing, the infrastructure of this whole new digital world?
Lots to chew on there.
Definitely. We encourage you to keep exploring these fascinating topics. Thanks for joining us on this deep dive into Astera Labs. We look forward to our next knowledge adventure together.